Hello.
Morning, John.
Good morning. Good morning.
So I'm actually away at the moment, but Sam's going to join very shortly and run the meeting. Henry's on a plane and Aaron's somewhere else. But anyway, and Chris is in a meeting. So Sam's going to run the meeting, but I'm going to sit in the background whilst things go on. Oh, here's Sam now. There you go. Sam.
Hi, Dave. Good morning.
Good to see you. Just to say that I've just given John a heads up that you're running the meeting, and I'm going to put the mic off and the camera off, and I'll sit in the background. And if anything happens, then I'll be on my phone. But thanks in advance for today, Sam. Really appreciate your time. Hope it goes
Pleasure,
well.
Thank you.
All right. Cheers.
Thank you. John, does that mean you know how all the recording works?
It
Sorry.
is recording, Sam.
We're recording now. Okay,
Yeah,
brilliant.
it's fine.
Great.
Cheers.
That's relief. And then, so that'll be downloaded in the right place for later then, hopefully.
Yep. It'll be in the chat. So brilliant.
Brilliant.
Cheers, Sam.
Thanks, Dave. How are you, John?
Hi. Sorry, your mic's off, is it? Or
I don't think so. Can you not hear me?
I can now. Yeah. So we're going to learn about Bitcoin, are we?
Hopefully a little bit. Did you? Were you on the previous call? Weren't you in August?
No, I had to record it because I was away. But
Okay.
I did go through it. Sure, I'm a fan of it.
Fine. No, everyone has to be.
So. You got to keep your mind open, haven't you?
Yeah. Yeah. It's quite different to many other things. That's the tricky thing. So, well, we'll get into some of it, but all the training that we've had through the actuarial exams and other exams and so on is really helpful when it comes to investment, but it doesn't really help us when it comes to money. That's when it gets a bit stuck.
Yeah. And I'm retired now, but
You'll be fine then.
But I've still got about 40 odd clients that keep on ringing me up. We've still got 2 long-term deals, which are not going to mature for another 9 years. And I seem to be the only one who remembers what we did 20 years ago. So, we'll see how that goes. But that's performing well. So there's going to be 300 million there to deal with. So
Keeps you busy.
hopefully be worth my time. That's a structure that's performed very well for us, but not well liked by the regulators. They think we overgear, but we don't. Actually, who's responsible for dealing with the gearing? It's not the client.
John, will you be keeping an eye on things like the chat? So obviously I'll be talking probably a fair amount, so it's a bit tricky to keep eyes on everywhere. Where you can tell me that someone's. Well, I think last time people were pretty good at putting their hand up with the button, so that makes it a bit more obvious that they want to ask a question. But there was quite a lot going on in the chat the last time.
Yeah, part of that was my fault. Henry's there. Only 5 of us so far.
Well, that makes it cheaper for me then, if I'm giving away some Bitcoin.
Yeah. Now, our daughter gave me some Ethereum about 10, 12 years ago, and I've lost all the passwords and everything with it. So I'm not sure whether I want to find out how much I've lost.
Good morning.
Morning, Carl. Muted. Okay, I'll mute.
Oh, has your note taker joined 3 times? Morning, Bobby. Morning, Podrick. I heard you at the airport, Henry. On an aeroplane. But you're literally on the plane. Yeah.
I'm looking after 4 dogs at the moment, so I might have to keep going off camera occasionally.
John. I'm not sure how many people are on the invite list, but happy to start when you're ready. When you think we should.
Who's giving the talk?
Oh, I am.
Right. I think we should start then.
Okay, good. Okay, thanks. So, okay, so this is a follow-up session following the session we had about a month ago. And it was a bit of an introduction to Bitcoin and what it is. And we started to talk about some of the ways in which it could be used, some of its use cases, etc. Now, quite understandably, there were a lot of questions, both on the screen, but also in the chat. And Henry did a very helpful blog very shortly afterwards, which set out some of those questions. So I went through your blog, Henry, and just tried to pull out some of the key themes, which is where the bullet points in Steve's email that came out, and that's where they came from. If you think I've missed any, then obviously shout, and we can hopefully squeeze them in. So there was also, I'm not sure if Steve sent them around, but there were some follow-up materials that hopefully gave a little bit of background, particularly around things like sort of some of the basics on how Bitcoin works, some of the social benefits. There was a short video on that. There was a couple of other videos. So hopefully, if you saw them, that they were helpful. And if you haven't seen them, then we can pick that up afterwards, along with anything else that comes out of this discussion. So the purpose of this is to really pick up where we left off, but also try and cover some of those areas, those questions that arose last time around. So I've got the PDF in front of me, which I shared last time. So maybe if I just bring that up and just sort of warm everyone up with a bit on that, and then we can dig into some of these themes, these topics. Okay, so hopefully you can read that. Can you read that, John? Okay, great. So we touched on some of this last time, so you'll recognise some of it from last time. It's exactly the same PDF that we used back then. And we talked about some of the difficulties. So why consider something different? You know, if everything seems to be working tickety-boo at the moment, then why fix what isn't broken? However, I think we're all aware that there are some issues with the current pensions and savings industry. And then it gets into, well, why is that? And the thesis that I was putting forward is it's not because we haven't got lots of clever people working on it. There are tons of clever people working on this, but it's looking at, well, actually, maybe there's something wrong with the base layer of what we're doing. In other words, the money. So that's the thesis there. And therefore, can we improve things if we improve the quality of that money, that base layer of the economy, society generally? We then moved on to some of the ways in which Bitcoin is viewed, and the narrative over the years has moved from one to the other and back again on these different arrows that are coming out of that Bitcoin logo there on the page. But another way of looking at it is what we've got, those circles on the right hand side, and starting on the top and moving the way down. It's not a perfect science, but and of course it's going to be at different speeds for different people. But if there is a new form of money, whether it's Bitcoin or something else, if there's a new form of money, then it tends to, at least from an academic theoretical basis, tends to flow through that process. I mean, a key, if the main focus tends to be on the middle two, store value, medium exchange, because they're real use cases. But medium exchange tends to follow store value on the basis that you need enough of that money to feel confident that you've got enough of it before you start spending it. That assumes you've got multiple forms of money to choose from, which of course we do at the moment. We didn't really talk so much about point number 3. So point number 3 is to do with this concept that there is, if something is used as money, and it could be the store value or the medium of exchange, but I think the focus here really for this concept is the store value point. So if there is something which is used as a store of value, then it takes on money-like properties, and therefore there is a premium in the price. So the price is higher than it would otherwise be, because it is being used for money, partially, as well as something else. So, for example, it could be housing. So there's definitely a clear use case for a house to live in. We need a roof over our heads, and we want to live in areas we want to live in. So that's fine, but for many decades, it's been, well, my house is an investment. Has been quite a common thing that I've heard over the years. And I think that's indicative of that people are, on average, generally speaking, taking out more debt to buy a bigger house on the basis that essentially forms a savings account rather than buying the house for its pure utility value. So that's the concept of the price of a house is partly utility, living in it, and partly because it's been used as a savings account or a form of a monetary property. And then we can apply that logic to other assets as well. So if we look at the global assets, so equity markets, bond markets, money markets, obviously property we've already talked about, but there's also commercial as well as residential, plus gold, art, classical cars, all of these to some extent or another. And there's an important point there, we can never calculate it accurately because we don't know exactly how much value people are putting on it for this purpose. But there is some part of the price relates to its money property being used as a savings account rather than its utility value in all of those different areas. Another great example is the classic car. Often the classic car is covered up and put in a garage and sold on a few years later for a greater sum of money. That's the purpose of holding it, rather than going down the shops to buy a pint of milk, for which you could buy a much cheaper car. So the idea there in that bottom left-hand corner, you see there that you've got silver, which is used for, we've got 3 examples of things which are thought of as, or have by some people thought of as money over the last few centuries. So silver, gold, and Bitcoin. Silver is heavily used in industry. Some people do, there's still silver coins, so there is an element of monetary property about them, but it's pretty small and shrinking, I'd expect. Gold, much more, you speak to multi-asset managers, not all of them will look at it the same way, but they'll tend to say, well, it's a store of value, it's a safe haven in times of financial stress, things like that, thinking within a multi-asset type fund, possibly that's the way they're thinking about it. And there's still plenty of gold coins around, and central banks are using gold as money, as a store of value by putting the bars in their vaults. The blue bit, of course, is used as jewelry, it's used in electronics, so it does have some industrial uses as well. And then you've got Bitcoin, which I'm drawing the line from left to right there in terms of that is pure monetary premium. That's the thesis. And that makes sense from the point of view there's no physicality to it, so it is purely digital. And therefore, can't make it jewelry, can't hang it on your neck, can't put it in a mobile phone to transmit electricity more efficiently. But it is, as we'll talk about a bit more, very useful as a form of money. And importantly, it's, once you look into the attributes of it, it's better than the other forms of money which we see around us. So focusing on gold and government currencies in particular, we talked a bit last time about how there's sort of 2 key attributes of money, for it to be saleable or easy to transfer over space. So if I can send money to the other side of the world to buy something, do that quickly and safely, that's a big positive. And also over time, and that's then the store of value aspect of it. I mean, you could argue that's a medium of exchange with my future self. But that is, that's the other key attribute. And therefore, as we talked, again, we just talked a little bit last time about how the current levels of adoption of Bitcoin are still relatively low, single digits percentage. It differs by different countries where they have more of a need for it. So arguably less so in the developed world and more so in emerging markets, where their government currencies are a lot worse than ours. Eventually, the one with the best properties, like any technology, the one with the best properties should gradually, over a period of time, it's not an immediate thing, win out. So I'll pause there for a moment. We've got a case study here which we can talk about from a practical point of view, and there's also some other practical elements on the next page of sort of next steps, and there's also the questions. Would anyone like to chip in, given where we are so far? Hey, Bobby.
So thanks for this stuff, Sam. I went through all this and I was still thinking I don't understand this. But then I went on to BBC and just looked into what Bitcoin actually is, and it really, really, really helped. And following that, I will have a question or two, but if I just explain just the very, very basics, very simply, so people understand what this is, and correct me if I'm wrong. So it's basically Bitcoin stored on the blockchain, and blockchain governs how many Bitcoins there are. There's currently around 19 million Bitcoins out there. To have a Bitcoin, to own them, you have to physically have some form of digital storage for it, a wallet. They only release a certain amount of Bitcoins every day. And Bitcoin mining, this is where this is explained as well. To Bitcoin mine, you have to be a member of a certain club to do it. And basically what they do is they give you these mathematical problems, complex problems, which you have to solve. And if you solve the problem, you get currently 12.5 Bitcoins. But that has halved. It halved in 2020. It was 25 Bitcoins if you solve the problem. And they monitor how many people are trying to solve the problem and make either the problem harder or easier. And so the intention and the forecasts are that the 21 million Bitcoin will all be in existence in 2140. So then in 2140, we'll have to think of a way of, they'll obviously be thinking if they evolve the market, whatever. But up until then, you basically got this stable amount of really secure. If we assume the blockchain's secure, there's very secure digital asset, which is going to be driven then by supply and demand in the secondary market. So that leads. So I've got anything wrong there, Sam?
That's pretty good actually, Bobby.
Yeah,
There's just a
okay.
couple of nuance points which might be helpful. So I've tried to scribble them down here. So you mentioned you have to be part of a certain club to be a miner, to mine Bitcoin.
Yeah.
So you basically, it's computers. You need to find a cheap source of energy in some computers, and then you plug them in. So
you have to subscribe to be a miner.
Oh, you don't. Anyone can do it. So you could buy a miner and you could do it. Now, I wouldn't advise only do it for fun. Don't do it for expecting a profit if you plug it into your wall socket at home, because your electricity is much more expensive than the electricity which they're finding in hydroelectric dams or the methane from landfills, whatever it might be.
Yeah. I wasn't saying you need to be part of a club to own Bitcoin. I was saying to be a miner.
Yeah, no, you don't. So you don't have to be part of a club. So I've got this is for fun.
Yeah.
I've got a little miner at home. I'm expecting to make no money whatsoever out of it. In fact, I'm expecting to lose money, which is the electricity bill. But it's a bit of fun. And I plug it in. I don't need anyone's permission to do so. Don't need to join any club. Anyone can do it. And that's that principle is quite key from all parts of the different parts of the Bitcoin network and how people interact with it. It's permissionless to join in.
Okay, so that was a wrong thing then. That was on the internet that they need to be a part of it, subscribe then.
Yeah, that's
So then
what
what are
so,
so my other question then is the supply and demand. I couldn't find any information on how the supply and demand's going, because that's what's going to affect the price. Given you've got 19 million and you're only ever going to have 21 million, the supply and demand's going to be the main factor. And it's as with everything else, it's going to be the marginal supply and demand. So how much of these things are actually traded, and then how's the supply and demand things going? So to me, it feels like an actual hard currency now, rather than just a digital soft one.
yeah, I mean, that's it. So the total supply is fixed. Obviously, the supply that is available for sale at a particular price fluctuates all the time, like anything. But the total supply is effectively fixed. It's got a bit more to go up. But I said we all know we could just use 21 million and then it's easier and then it's fixed. So it's really all about the demand. That's what really drives the price, with a little bit of dampening from the supply at particular prices. And that demand is, you've got something that's going from zero to, well, it's now $2 trillion or so in terms of total value of all the Bitcoins. Maybe it goes a lot higher. That's the thesis. And so over the years, there's been a lot of hype, like with any new technology. This is very exciting, maybe it's got a lot of potential. Doesn't happen as fast as people think, and then they sort of panic and move on to the next thing, sell their Bitcoin, move on to something else, and then come back and realize Bitcoin hasn't died, and then get excited about it again, and then it doesn't happen quite as fast as hoped, and then move on. So I think this, one way to think about this massive price volatility, which seems to be dampening, but I would still work on the basis that it's very volatile. It's basically human emotions. That's what's really driving, whether it's the excitement or the despair that things are not happening quick enough.
Given that you're not, there's no central exchange, and given that you can't see the supply and demand in the secondary market, how do you actually price it in your accounts?
Same ways. Obviously, you just get market price like you do on everything, like you would on Apple stock.
It's about $50 billion equivalent today, each day of trading, Bobby. And it ranges from lows of, say, 10, 20 up to $100 billion a day. But if you consider, as you said, it's just another currency day, you're saying it's going up or down in price versus what? And the reason, it keeps going up versus everything else is because the other mediums of exchange or store of work are being devalued and debased. So what you can buy with it goes up and down. And it's the same for Bitcoin. The beauty is, because you can't print more of it, all else being equal, it should go up in whichever currency you hold. That's the idea.
Over long periods of time, anyway, because you've still got those emotions. Well, roughly speaking, if fiat currency wasn't being continually debased, then maybe the price would be flat in those currency units in pounds or dollars. But of course, we know that's not the case. So all else the same, we'd expect over periods of time for the Bitcoin price to go up. However, you've got it being adopted from a low base, and you've got these human emotions, and you throw all that into the mix, and we see the price on the screen. So we get asset statements, Bobby.
Is there a central price then around the world for it?
It's not a central price. I mean, arguably, it's not a central price for anything off the top of my head that's got a central price. So you've got even take gold or certain shares. If they're bought and sold on different exchanges, they can have different prices. But they're very close. It's a very liquid market, and therefore there are people actively looking to arbitrage one exchange, let's say Hong Kong against New York or against London or Australia, whatever it might be. And therefore the bid offer spread is very tight.
you think there'll be any requirement for central exchanges like there was with the derivatives because when derivatives first LDI, for example, first came out, that wasn't centrally traded, and that was then required to be centrally traded. Is there any talk about that in Bitcoin?
No, I think people tend to approach it from, if you're going to buy Bitcoin and play silly games with it, then you might win, you'll probably lose. If you're, I mean, it's one of the points on the list actually. It's how to custody it, and so the way we look at it is you want to buy on-chain Bitcoin, you put it in what's known as cold storage with various protections about it. You don't lend it out. You have it in a segregated wallet, so you minimize that counterparty risk and you just hold on to it. Now, you might trim the investment from time to time, obviously, to realize some of those profits, particularly if you're in a DB scheme. But the core principle is you buy it, you hold it extremely safely. And so in that scenario, you don't need a central exchange. It's only when people start bringing in lots of leverage and all those buying, selling on the margin, that then you bring all these systemic risks in. So whilst we're on custody, then, so the way that I'd look at it is, it's like having gold in a vault. Let me come out of the PDF for a moment and go back to it shortly. So the way I look at it is, conceptually look at it as you want to hold physical gold in a vault. It's the equivalent principles. So physical gold in the vault, you make sure you've got physical gold to start with, that you don't have a tungsten bar painted gold. You don't have someone's promise that they will pay you gold, honest. It's actual physical gold, and it's sitting in a vault that is ideally segregated. You've got your own vault that you put it in, and you've got lots of protections around who can get in and out of that vault. Apply those same principles to Bitcoin. So you want to hold it segregated in a segregated wallet, no rehypothecation, no lending out. You want to have a well thought through. There's be certain keys to enable transactions. Have a lot of thought around who holds those keys. You don't want it too many, you don't want it too few, you want it to be the right people. You want to protect not only the Bitcoin, but the people that are holding the keys. So no one person has single access to it and things like that. So those are sort of some of the principles involved. John, are you keeping an eye on the chat? I'm seeing the odd message crop up, but I find it difficult to talk and read at the same time. Well, okay, maybe someone can point me to if there's a particular question in the chat, because I'm struggling to do both at the same time. Okay, so should we touch on some of the other? I mean, bear in mind these are all still from a fairly high level. We're trying to short circuit some of these issues, but you can go into a huge amount of depth. You probably do at least one call on each of these topics, if not multiple calls. So that's too much really for most people. So let's touch on the energy use as one of the ones used. So we actually issued an article earlier on in the summer. So I'll circulate that afterwards. Goes in a bit more detail. And it was looking at it from an ESG perspective. And so it touched on a few things there. So it touched on things like 1.4 billion adults globally who remain unbanked. So this is like having a bank in your pocket. And that can be a dramatic change for if you think about the poorest in Africa or where they're really struggling financially, to be able to have something that you can save money in rather than losing 50% of its value every year. The article talks a little bit about the environment as well. So there's a few examples it gives where it can be helpful. So for example, Bitcoin miners, so they're incentivized I might have touched on this last time, but essentially the revenue, in simple terms, the revenue is in Bitcoin, and you touched on it briefly there, Bobby. So they get Bitcoin as the revenue, and their main cost is the cost of electricity. They can't control the price of Bitcoin. They can control the efficiency of the computers they use to mine Bitcoin. So the more, say, random numbers that those computers can guess, the better chance they have of being the first to guess the right random number, which means they get to win some Bitcoin. So they do have some control over that. But the main cost is electricity. And so they're incentivized to go to the cheapest, wherever that is in the world. And they don't need any pipes or cables. It could be a portal cabin with computers in. You plonk it in the middle of nowhere. All you need is an internet connection. But where you're plonking that portal cabin is where there's cheap electricity. So wasted and stranded electricity is very attractive because normally it's been largely given away for free or near free. So think of a hydroelectric dam in the middle of nowhere. Of course, hydroelectric dams tend not to be in the middle of cities by definition. We're thinking there are not all landfills, but some landfills, particularly the bigger ones, tend to be a long way out of cities, and therefore they're not on the grid. If they're on the grid, they could pump the methane that comes out straight to the grid, and we could use it in our gas stoves, but with a bit of cleaning. But that's not the case for some, and so that actually. That's probably that alone, which over the next few years will help the Bitcoin network, to become the first carbon net negative industry. We've got a lot of wind power, wind turbines in the UK, some solar, and they tend to be, if they're out in the middle of nowhere, often they do have cables. We're fairly well connected in terms of the grid being spread over the UK, but there are still some that are isolated, or it can be quicker to build the wind turbines or the solar panels, but actually getting connected to the grid can take a few years in some cases. And therefore, what ideally you need is a buyer of that electricity to incentivize the building of the wind turbines or the solar panels in the first place. There is an issue with wind and solar, of course, is that it's intermittent. It's windy when it's windy, and it's sunny when it's sunny. And so we're only producing electricity through those means at those times. So the problem then is that up and down of the electricity being produced may not coincide, and in fact, it'd be massively surprising if it did, with the electricity demand on the other side coming out of the grid. And so at the moment, what happens is that those wind turbines, essentially the electricity is either they're just turned off, or the electricity is put straight into the ground and wasted from those wind turbines when the grid does not need that electricity. And that is roughly £1 billion per year. That is electricity being wasted by wind turbines, it's electricity produced that's not needed for the grid. Seems a bit daft when we've got high energy prices, but that's the energy policy we currently seem to have. And in fact, the wind turbines are paid to turn off. So it's perverse incentives. And so that sort of leads on to that you can rebalance the grid more easily if you've got historically we have flexibility on the supply side of electricity through gas power stations particularly. But if we have flexible demand, then it gives us much more control over, and that allows us to reduce the amount of gas power stations we need and increase the intermittent electricity producers. Padraig, so you've got your hand up.
Yeah, this point about wasted electricity is one that's used certainly by the Republicans in the US at the moment. Wouldn't it be great if somebody would create something that would allow us to store excess energy so that we could tap into it when we needed it?
I mean, batteries are getting better, aren't they? If that's what you're referring to.
Yeah, it's just policy that's causing the problem. Batteries exist. We could even repurpose old car batteries to create banks of storage. But I mean, the whole notion that we can't store energy is utterly facile, and I'm surprised that people keep bringing it up. Clearly, the grid isn't up to scratch, but we know that anyway. Sorry, I'm just getting sick of hearing that particular argument about not being able to store power because we've been doing it for more than 100 years.
Well, I guess there's two ways of storing power, isn't it? I mean, you're right. We should be better. The grid is not up to scratch, and the technology exists to do much better. And I think batteries will be part of the solution. But they're not always quick to turn on and off in the same way, and therefore, like any problem, we should probably attack it from a number of different angles and use whatever works the best. But yeah, somewhere to go on that, it seems, sadly.
It's not new. We used to turn power stations on and off. Used to turn coal power stations on and off.
Yeah.
So it's not a new problem. And I think batteries is the most big, huge batteries to store stuff like this is the most underdeveloped of the forward-thinking technologies, I think.
Yeah. I'm sure batteries could be much more used than they are. And then lastly, the example that we've had in this note was sort of putting a couple of those sort of ideas together. So there are case studies, examples of where this is being rolled out in Africa, where they have a river, they got no electricity, and they got it's not like they got capital resources, they haven't got money to invest to actually sort of convert the running water into electricity and therefore power their local village. However, and that's partly because you've got the water running all the time, but of course they don't want electricity all the time. So instead what they can do is people are going in and they're essentially building a mini power station, which includes Bitcoin miners. And when the river is flowing, well, the river's flowing all the time, but when people want electricity, they're taking the electricity, and when it's not needed, it's being used to mine Bitcoin and therefore subsidizing the entire operation. And so you are literally seeing situations where people are going from no electricity whatsoever, cooking on wood fires and other. I mean, I was in the Scouts and I had great fun making wood fires, but it's not a very healthy way to cook over a long period of time. And now they're moving to electricity, just having light at night, being able to cook more safely. It's the basics we take for granted that they haven't got, but Bitcoin is enabling that in practice. I'll circulate that afterwards if it's of interest. But I just wanted to give a bit of an overview. I think maybe to finish on that topic, one of the points that's been made over quite a number of years has been the answer to sort of saving the environment is to use less energy. I think there's a bit of a problem with that because it ignores knock-on consequences of using less energy, and it also ignores where the energy comes from. So there is a difference between clean energy production and dirty energy production, and we need to distinguish between the two. I would argue that using energy, whether it's electricity or in some other way, is a good thing. In fact, the more energy we can use, the better, because there's a direct correlation, for good reason, from using more energy to raising people's living standards. And whilst in the West, we are, we can say, well, we're all right, we've got a roof over our heads, we've got food to eat. Huge parts, first of all, there are parts of the UK which are heavily deprived, but there are also huge parts of the world which are heavily deprived. And so just by saying we should all use less energy, I don't think really considers the full picture. Where it then gets interesting is then, well, how how do we produce that energy? How do we do it efficiently? How do we avoid, I don't want smog and things like that. So how do we do it in a clean way to try and get the best of all worlds, rather than just everyone use less energy, which seems just is too simplistic, and I don't think it'll actually work in practice. We'll just all be poorer. So I realise that's mildly controversial, but I think it's an important part of the overall conversation on these kind of things, to put them in context. Okay. Should we? Hello, John.
I'm getting a little bit lost in the objective here. I mean, certainly when it comes to efficiency on energy, the way you use less energy is to change the system fundamentally. For example, I invested in a startup company which is using light switches instead of electronic switches, which would probably save something of the order of 20% of all of the server farms' electricity bills. That's how you get value delivered. And I've always thought that if you model how you make money for people by measuring it by the value you create, I really find it very difficult to understand how Bitcoin does anything other than pass it on to a greater fool. Because there's no intrinsic value being delivered, there's a price being changed. So there's an awful lot of energy being utilized in something which sounds really to me rather like the tulip game. It worries me. I can see the value in the technology behind the ledger, as long as the internet doesn't get weaponized, as it's being done at the moment. You're already seeing that happen with the internet being switched off in various places. That would make a mess of most of the assumptions being made at the moment. But I think we need to, if we're looking at value and creating value, we've got to go back to fundamentals. I mean, I've invested in water because that's your next gold coming along. I've invested in the technology to save the energy on server farms. That I can see where the value has been delivered. I can't see value in what we're talking about at the moment. I really can't. So
It's probably worth saying that I'm not saying, believe it or not, I'm not saying you should put everything into Bitcoin. There are lots of things that should be invested in that are legitimate investments, and there's risk attached, obviously, to everything. But they are legitimate ways, and so. Well, we can move on to the sort of Ponzi aspect of it, or the Ponzi sort of myth, if you like.
Well, it's not so much Ponzi because that will always happen, and the biggest Ponzi scheme I can see comes in a personal representative when we start to account for pensions in inheritance tax. That's going to be a gift to the ambulance chasers of the world, and the poor will pay again. No, I'm trying to deliver value. And I think the failing there, the one to really solve, is how on earth you get people to have the liquidity they need for their pension payments and spending, linked with the government's need to do infrastructure investment, and the regulator who wants to treat everybody as if they're sophisticated investors until they lose money, at which point they become retail investors and some poor IFA gets sued to bankruptcy. So, the system is a little disjointed at the moment. It really is.
I mean, I think you're doing a good job there, John, of pointing out some of the weaknesses of the current pension system.
Well, everybody's looking for this magic bullet, aren't they? And in fact, there's not just one market. There are many markets. There are those 24 million people who don't pay any income tax at all because they don't earn enough to pay it. They are always going to need some support. We need to recognise that. The people in the top 10%, who seem to have about half of all the assets, will always rise to the top because they've worked out how to play the game effectively. And it's all you've got to do is try and persuade them to be a little more socially responsible and to support the weaker members of society. But since all the rules are gone, and it's now the man who shouts loudest who causes the most discontent, you know, that orifice that makes Ian Paisley sound like a priest of reform, you know, that they're the sort of people who actually play on the weaknesses. All they've got to prove is how badly they did with us with Brexit, and now they want a job doing the big job. We've already ruined our economy by about 6%, goes back 10 years on living standards. So, you know, it's worrying. It's very worrying.
I mean, playing the game is sort of, Bob, I see you got your hand up there, Bobby. I'll come to you in just a moment. So you mentioned quite a few points there, John. I'm not sure I'm going to be able to answer all of them, and even few of them satisfactory. So you mentioned playing the game. The game is one of the foundations of the game, the economic game that we're playing, and in fact, I'll argue it's a societal game as well, is the quality of the money on which we are building all our lives. And if the quality of that money is poor, it's a poor foundation for everything else. And I think I might have touched on it last time, but things like I think I got a little bit of flack for it being a few hundred years old, but the Cantillon effect, I don't think an age of a theory makes it right or wrong. I think it's whether it's right or wrong. So the Cantillon effect, I think, does quite a neat way of describing how a poor quality money, either one that's been regularly debased and is, well, like the one we've got now, actually leads to a widening of the gap between rich and poor, because it benefits asset prices at the expense of consumer prices going up faster. So yeah, I'm not saying it's the answer to everything, but I think there's, I think almost you could turn some of that around and say, well, actually, if the money is better, then that will flow through into some positives for economics and society more generally. But I realise that's a little bit sort of theoretical. Bobby, do you want to come in?
Okay, so first on the energy point, I agree that we shouldn't just try to reduce energy usage. We should look for smart energy usage. It's a bit like I'm doing some other stuff with another organization looking at our energy usage and how to be sustainable. And it isn't the case. It's obviously the obvious. You could say to be fully sustainable on travel for the organization, you just don't travel. But that's just there's a balance between living and working and doing things and being completely sustainable. So I get that one. So hopefully over time the energy usage will become more efficient. I do see a bit of a store of value because you have to invest quite a lot to actually mine this Bitcoin now. And the more I look into it, again, no one actually controls the Bitcoin or controls the blockchain. They're all little nodes that you have to get separately on different machines all around the world. I don't know, I don't understand it, but it looks to me like it's very, very spread. It's not owned by or controlled by one central organization or central group of people. One thing I'm not unsure of though is, so it's not quite a store of value when effectively they're issuing the same amount of Bitcoin pretty much every day by varying the complexity of the problem that needs solving. Who controls that? Is that now in a place where it's not actually controlled by certain individuals? It's actually just part of the system. The system developed that. Sorry.
It's just in the protocol, essentially in the computer code. There's no human intervention whatsoever in that process.
So it's basically what's been built up is a secure digital vault that spreads around the world in different nodes. And to get access to the node, you need to mine these Bitcoins, unless you go on the secondary market. So to me, some of the traditional problems of control have been almost diversified away in the way this has all been set up.
There's a big protection for it. One of the reasons why it's been so anti-fragile is that it's incredibly decentralized. So you've got so those two key groups you mentioned there. So you've got the Bitcoin miners, who are using a lot of energy to do guess lots of random numbers to be the first one. And roughly every 10 minutes, a new block of transactions will be confirmed. And then that miner who's guessed that random number gets some Bitcoin in return for doing that work. So they are spread all over the world. The largest is in the US, but I mean, they're even within the US, they're diversified. So all they do is they guess random numbers and try and get paid in Bitcoin. And then you've got like a separate group, and okay, there's going to be some overlap because if someone's interested in one, they're probably interested in another, but less and less so. And that's the nodes. What the nodes are doing, it's a small, anyone could do it. It's a small computer which downloads the entire history of all Bitcoin transactions and is constantly checking that the transactions are consistent with the protocol, the computer code that's at the heart of all this, that determines things like the 21 million cap and all that. Make sure it's in line with that. And that's all it does. It just keeps checking that everyone's acting according to the rules. And if one of the nodes says, do you know what, I'm gonna be cheeky and let a different transaction through, because it needs to agree by consensus across all those nodes, that defunct node or the rogue node is kicked off and not used. And then the remaining nodes can carry on. I mean, obviously the node can come back if it's not going to be rogue. So you've got miners doing all this work using electricity, and you've got this node network checking that everyone is acting according to the rules. And you can knock out any miner, any node, and the network keeps going because it's not reliant. There's no central point. So it's more decentralized than anything I've ever found before. It's quite incredible. Okay, so we've got about 10 minutes left. Is that right, John?
Yeah, you've not mentioned taxation. And I know we're in the pensions world, but how is Bitcoin taxed, and to which revenue authority do they account?
So obviously, bear in mind, I don't give tax advice, but I better say that. But it's taxed basically like any other asset. So it depends on the entity. So if you're a pension scheme, then you don't pay capital gains tax. So that applies to Bitcoin just as it applies to, I don't know, an equity or some other asset. If you're an individual, then you'd pay capital gains tax to the extent that you bought some, sold them at a higher price than the gain.
But not in all jurisdictions. I mean, for instance, I live in Portugal, and if you keep Bitcoin for more than 12 months, then you don't pay the capital gains tax charge.
I mean, you're so absolutely right.
So you could arbitrage that game. I mean,
is what, sorry?
Sorry, I say that I live in Portugal. If we have clients who buy houses and things that we organise for them, some pay in Bitcoin, right? They're making a capital gain. But if they've owned that asset for more than 12 months, they do not pay capital gains tax on it. It's tax exempt. So surely people are going to treaty swap, aren't they, with this, and everybody's going to finish up in Delaware, I suppose.
Well, you're making Portugal sound very attractive.
It is. It's underexploited, and it's not exploited at the moment. But it's a fact, and it's there in the revenue code here. So it's
that's arguably what it should be, that we're.
Sorry, I can't hear. Say again.
That's arguably what it should be to some extent, where governments are competing against each other to actually deliver a service at a reasonable price to their population. So to the extent that there are people that are willing to move between different jurisdictions, and obviously if that's a personal choice. But if that helps to keep governments on their toes a little bit, it's probably no bad thing.
Well, I don't know if it's the only 600,000 people who pay 1/3 of all the income tax in the UK decide to move, then that tax charge is going somewhere else, isn't it? So I'm not sure it is such a good thing. I mean, there's no inheritance tax in Portugal, which is if you're to first levels as well. So there are attractions, but I can't see where Bitcoin actually has the ability to to pay the tax. And if in fact people are not paying tax on their gains, at some point there'll be a day of reckoning, won't there, with the revenue authorities? You know that
So
these games only happen for a short while and then they get closed. If you see it in the Financial Times that it's tax free in Portugal, that's the time when that is finished. That's normally you've missed that boat. But so what percentage of Bitcoin will have to be given over to revenue services? You know, 30-40% of it.
It'll be
all of
interesting
it.
if they accept Bitcoin itself. But I mean, the general point stands is that, you know, everyone is tax resident in a certain country and needs to abide by those tax laws. And
Yeah.
if they make a choice to move, then they'll be like you, John. So it sounds like you've made the choice to move.
Sorry, when I first came into the business, there were two pages. There was a yellow book and an orange book. Now there's a shelf of those books, and if anybody says they understand tax in the UK now, they lie about other things as well. So, good
Well,
luck.
hence why I said at the start, I'm not a tax advisor.
No, but it is a relevant 30% sitting there in the background waiting to nab you. So it
Yes.
should be taken into account.
Absolutely, yeah. We've got a few minutes left. What's best to cover? Maybe if I go back to, if I try and wrap it up a bit with what we've got on the second page. So, well, I'll just touch very briefly on this. So this was the pension scheme that we advised on and helped to facilitate their investment back in, actually it's almost a year ago now. And there's the critical thing is on the top, right? They've got a long time horizon. We are completely upfront that Bitcoin is very volatile, and you know, you might buy it and the next day it drops 50% in price. But the point is, it's a long-term investment. So as long as you believe in the long-term thesis of harder money, essentially harder money, the new harder money will do better as the adoption rate improves and increases, then that makes sense. You'll notice also there is only a 3% allocation. So they've got 97% in other stuff. So it's a well-diversified portfolio. They're not using it to pay pensions directly. I think one day that will happen, but we're quite some distance from that yet. So they will need to sell the Bitcoin either to rebalance their portfolio or to pay pensions. And I've covered most of that. And the real focus in terms of risk was the custody side of it. Let me see if I can just drop down then. There we go. So we didn't really touch on this last time. So number 5 there. So this is my suggestion to the pensions and investment industry. We don't advise, we're not IFAs ourselves, but we do speak to some IFAs, and they seem particularly keen on this sort of area and doing it in a sensible way, hopefully. But other parts of the pensions industry seem to be somewhat behind. And so I did some back of the envelope numbers a while ago. So we say, well, 5,000 DB schemes, half of them are not far from buyout, so they should just be focusing on smoothly getting to buyout. The other half have got a long time horizon to get to buyout, or maybe they've decided they've got a much longer time horizon for, they've chosen specifically to stick around for longer, in which case long time horizon. But there'll also be some within that other half where it's not appropriate. So, for example, the company's very cash rich and might want them to buy out in a jiffy. So maybe 500 pension scheme DB schemes in the UK should already be invested in Bitcoin. So I think it's worth thinking through as part of a diversified portfolio, like the example I've just given. So it's worth thinking through your schemes where they've got a long time horizon, and they're fairly certain that it will be a long time horizon. It won't certainly go from 10 to 1 in a heartbeat. But when looking at this, is where a lot of people seem to get stuck, is they dismiss Bitcoin before they start thinking about it in the context of the scheme. So what I'm urging the industry to do is just to treat it like any other asset class. So, and that's the way that we looked at it. We said we've got all these asset classes on our buy list, and all we're doing is we're adding Bitcoin to that list. And so we then apply the same analysis we would to any other asset class. We're thinking about expected return, volatility, correlation, liquidity, implementation, all these normal things that we all think about all the time for every other asset class. I mean, there's quite a bit out there that it, some people say, well, it can take a long time to understand Bitcoin, and I think it can take. It's not a 5-minute job, because it effectively turns a lot of things upside down that you previously thought, which is part of the fun. But equally, it doesn't need to be 1,000 hours. And what we're trying to do is give, like sessions like this, give as many shortcuts and help people on the journey much quicker than it took us, which then means, well, it should benefit everyone then. Okay, I think we touched on some of those. So asymmetric growth profile, much more upside than downside. That's very attractive in a portfolio. And difficult to model risks. So one example of that would be to go back to the monetary premium risk that I mentioned earlier, or the monetary premium concept. And so the idea there is that, let's say, a percentage of the global assets, real estate, equities, bonds, money markets, is monetary premium, and then you get something coming along which is much better than all of it. What percentage of that monetary premium in existing asset classes we're all familiar with, how much of that will it absorb? There's no right answer there. We don't know. We have to wait for the future to tell us that. But you don't have to have very large percentages to see quite a large rise in the price of Bitcoin. So how can you hedge that monetary premium risk? Well, you buy the asset that should benefit from money draining out of equity markets and bond markets and property markets. That's not a risk that's considered anywhere that I can see, but it's a qualitative risk really, rather than something that goes in a model. And one of the problems we have in our industry is that sometimes if we can't model it, we pretend it doesn't exist, and I think that's a real concern. The number 6 on sort of practicalities. So I mean, certainly from our point of view, thinking about how much investment risk could be taken, etc. We think a lot about how strong is the employer covenant, what risk can they bear, and if you have 2 identical companies and one is proactively adopting new technology and the other one is not, I even if they're exactly the same strength today, I think we can all see how that might play out over time. So there's obviously a lot more technology out there than just Bitcoin. There's AI, there's some of the things John was talking about earlier. So it's not just one answer, but it's generally about, if you have a company that's willing and keen to adapt to new scenarios, to new technology, then that should over time be a positive for their strength. And there's some examples there about where money touches their existing business, and therefore it may be possible to improve or put in a plan B. Take some action, at least take some thought, even if they don't take action. Right, so it's past. John, what would you like to do? I see there's lots of stuff in the chat which I'm sorry I haven't been able to read in the same time as speaking.
Oh, thank you. And thank you very much for the talk. It's pioneering, and we need to keep an open mind. I think it's just because we're not familiar with it doesn't mean to say it's wrong. Thank you very much for taking the flak as well.
Thank you. All right. Well, thank you very much, everyone. If you've got any other questions, you know where to find me.
Thanks, Sam.
Thank you.
Thanks,
Cheers. Bye.
Bye.